What's up guys? I'm Ishmael from Automart and I'm here to talk to you about whether you should pay for a car in cash or installments. There are several ways that one can get access to a vehicle. Sometimes they're gifted. People can swap cars, but we think it's safe to say that most of the time they are paid for. When it comes to paying for a vehicle, there are two ways that are most common. There are cash payments and there are credit payments. And we would like to look at the pros and cons of each in this video. As an automotive marketplace, Automart wants to ensure that our users are well informed about car finance. What are the pros of paying cash for a car? Now, with a cash deal, you benefit because you pay the price that the car is advertised for. There are no interest rates and there are no additional costs. With a cash deal also, it is easier to negotiate for a better price with the dealership, especially if the car is a used one. And the transaction time is a lot quicker. It's less complicated and not as administrative. Now, what are the cons of paying cash for a car? If you're wanting to build up your credit score, then paying cash will not benefit you. If you're using your savings, then paying cash for a car will deplete what you have in your cash reserve. The cash paid for a car could rather be invested in interest-bearing investments. But what are the pros of buying a car on credit? Applying for finance and being approved by the bank is a good thing for your credit score and record. Having finance allows a lot of people who don't have access to a bulk amount of cash to get into a car earlier on in their lives. Financing a car also allows some people to get into cars that are slightly more expensive. Now, what are the cons of buying a car on credit? At the end of the day, you'll end up paying more for a car when you pay using finance. The vehicle only becomes yours once it is paid off. If you have any financial difficulties over the loan period and happen to miss a payment, that can end up costing you more money because you can incur penalty fees. You can also end up paying penalty or early settlement fees if you try to dispose of your car too early. Now, the million-dollar question is, can you do both? The simple answer is yes, you can. Putting down a deposit on the car means that you immediately reduce the amount for the portion you will need to finance. The finance amount will not be as big, so it will not cost as much as doing a 100% financial deal. You still end up paying more than the advertised price because of the interest, but having a deposit can help reduce this. You are also then not depleting all your savings, so you still have cash that you can invest or continue to save. If you're looking for a new ride, then visit Automart and search the biggest automotive online marketplace in South Africa.